Everyone, welcome to a massive Monday market update. Can't wait to crack in today. Let's get into Bitcoin. I've got some cool things to show you, as well as some charts, and I'm going to talk about some narratives that are really popping off at the moment. So I just wanted to show you Bitcoin really quickly, what we're grappling with, and that is the 200-week moving average. I've gone to the white chart today, just to give you a nice visual of what's going on here. I've just drawn the red box there. This is the resistance zone that we really want to crack, and Bitcoin is having a heck of a time trying to break through that 200-week moving average. It's not the worst thing in the world. This is actually really nice, and we were discussing with our mastermind clients that we've been expecting this and hoping for this, but we have a bit of a sideways cool down. A lot of the momentum oscillators are now just cooling down, ready to reload. We absolutely have a pullback here to around about 20,000. We've got the 200-day moving average, but until we do, we're just playing the ball where it lies, and this is consolidating under resistance. So hopefully we see some action here this week, although risk assets are just consistently finding headwinds because the dollar, the US dollar currency index, DXY, is having a nice little rally here. You can see this is on the weekly, but over the last few days, just zoom in just quickly, it's been adhering to this very clear, horrible downtrending channel if you're a US dollar bull just in the short term. And it's just been going lower and lower. Now, look, US dollar is going to bounce at some point, and this might be the rally, it might not, but just the last 3 days, it's up about 2.5%. Really nice move. It's coming out of that channel, which is interesting, and it's coming on this horizontal volume support now, testing it as support. So flipping from resistance to support, which is really interesting. See where this candle closes. But the dollar looks like it might want to run here. It's going to have some issues as well in terms of this rally. So the ECB and Bank of Japan are both doing things which will likely tighten their own currency supply. And the DXY is a basket of fiat currencies against the US dollar. So the dollar will face headwinds shortly. So we're just waiting to hear on that. Also got the Fed beginning to soften their rate hiking cycle. So we expect the dollar to actually continue this downtrend, but we just don't know. All you can tell from this is dollar moving up, it puts the denominator of risk assets higher. So if you're looking at Bitcoin versus US dollar, if the dollar's screaming high, Bitcoin's staying steady, again, that means the Bitcoin is likely to drop because the dollar is heading higher. It's about the denominator, and that's what we're seeing. But broadly, it puts heat on risk assets. I think S&P 500, NASDAQ, all that. Right now, though, the NASDAQ and the S&P 500 look really great for a breakout. So if that all holds true, then I expect Bitcoin to have that move through that resistance. But that is just speculation. Just, again, play the ball where it lies. Here, we're consolidating under resistance. Nothing decisive yet, but very clear. If we have a look at the trend, what we're trying to achieve here, it's broken out, wants to break above and continue this move higher. So we'll see how that rolls. If we look at Ethereum, this is Ethereum on the monthly. I showed Bitcoin on the monthly a lot, hyper bullish on that longer term. If we just have a look at Ethereum, though, doing very similar things to Bitcoin. We just don't have any more information apart from the fact that it's finding resistance at a range point. So we've got the range low here in yellow, and we've got the range high here in green. It's testing up against that on the monthly chart, but clear as day for me that this is a bit of a breakout from this triangle structure. And Ethereum has, over this period of time, especially over 2022, has shown a stronger strength than Bitcoin. It's shown relative strength against Bitcoin. Didn't even make a lower low in the FTX crisis. So Ethereum's going to have a really strong move at some point this year, in my opinion, based on this here. And on the monthly chart, you're just getting so much more data. This 21 moving average at around about 2,300 for Ethereum looks like that nice short-term target, or short to mid-term target. The MACD as well about to turn around for the bulls. So yeah, I think this is looking really nice for Bitcoin and Ethereum in the short to mid-term. Again, lots of things to play out in the macro sphere, but playing the ball where it lies is really important, and it shouldn't blind you, whether we're in a bull market or bear market, it shouldn't blind you what we're seeing on the charts. If you're afraid of macro, sure, you can be afraid of macro, but if the market's risen 40%, it's about to go another 60% higher, and you're just still worried for the macro market crash, then what are you doing here? You need to, again, play the ball where it lies. If everyone's just terrified of something, the market will do the other thing, which people aren't expecting. Money is made in disagreements. If everyone expects something, it will not happen. So think of the same mindset as we were at 60,000, 69,000. I swear everyone on Twitter and everyone in the crypto space expected we were going to 100,000 with the blow off top, the final retail sentiment. I was one included. It didn't eventuate. We had the rollover, Federal Reserve coming in with QT, and it just started from there. The liquidity leaked out. We never got that blow off top. Same exact situation when we were down at 15,000. Everyone and their dog and the tennis partner thought we were going to 12,000. A lot of people still do, which is exactly what you want for the disbelief rally to come out of a bear market. And I'll just throw it out there. Okay, if you have not already, please make sure to read our newsletter release from last Thursday that I wrote. It's about the new investment trend, and that is AI and big data. Came out Thursday. AI had already started making a move on the charts. If you go to CoinMarketCap and find the big data AI tokens, they were already beginning to move. I think this is just the very start of a larger trend over the next few years, but every single crypto cycle we see a new niche arrive. It's huge. Think metaverse, think NFTs, think DeFi, and there's other numerous ones. If you get in early, you can make life-changing wealth. And I've just put in here, how to identify the trend, what to look for, and also the pitfalls. I think that's super, super important, because right now there seems to be an overvaluation in quite a few tokens and not much substance. So you really want to pick apart everything and just make sure you're investing at the right time and just moving through the process correctly. But look, please read this if you haven't already. It will give you a massive leg up. And in this, I actually mentioned AGIX, the graph token, and a few others that are absolutely pumping. So yeah, again, please go and read it. And it's all about identifying the trend early. You can still make tremendous money in a lot of crypto niches that have already happened, but generally, you catch it at the very beginning and you can make that life-changing wealth. But it will have boom and bust cycles because it is hyper speculative at the beginning. There's high risk, but also high reward. So there's a reason why there is that tremendous reward. It is because there is so much risk early. A lot of these top AI and top big data crypto tokens that are there right now, let's say on the market cap scale, let's say half of them won't be there in a few years because it's ultra competitive right now, and a lot of them are trying to do the same thing. But that doesn't matter right now because the sentiment is there, the narrative is there. Think Facebook Meta. As soon as that happened, every single metaverse token went up, 500% plus. So just think of it in those terms. You can have a small speculative investment account where you just roll through those sort of thoughts. But if you're looking to invest in this longer term, then absolutely it's time to start thinking about it. And also after it's had likely a bit of a speculative boom bust here, maybe in this full year, we could absolutely see the blue chips, those ones that are going to be around for a while. That's when you want to strategically look at those. Once the hype and the balloon has burst, you can just pick apart the carcass and find what you really want and then make some serious dough. We have a look here at the graph. This has had an incredible run. So from the start of the year all the way up, it's 158%. That's not the most extreme gains that we've seen. I'll show you the next one. But it does tell me that, yes, we're in that hype and frothy phase, but we just want to be a bit careful FOMOing into these coins at this stage, because I'm seeing top of the range. I'm seeing massive overextension from moving averages. Yes, these tokens haven't been around very long. Some of them are longer than others. But just be a little bit careful FOMOing in, because these are almost parabolic green straight candles. So just be careful if you're looking to get in, wait for pullbacks. Again, you'll know this if you're doing our course, but I just want to throw it out there that you shouldn't be at the phase where you just want to throw money at absolutely everything and go all in. This is just a time to really look at them as that next massive narrative going forward. AGIX, I just have to show it because it's just been gaining strength. And this is all on the back of just AI and big data generally. In my opinion, it's on the back of ChatGPT. So that is the human-like chat bot system that's come out right now and it's taking the world by storm. In fact, it's the most downloaded, adopted piece of software, speeding the iPhone in terms of adoption uprate, which is just mind-blowing. Again, I go into the news of this, I'm not going to talk about that, but it's given this narrative and niche of crypto tokens that really harness AI and big data that jolt in the arm to move higher. And that's what you need. You need a catalyst. And that's clearly what's happened here. So if we go here, ChatGPT, I think, came out at the end of November, but we have a look, just went sideways and then shoom, boom. So this one here, 500% to that point. When some of our mastermind clients, we alerted them around here, they got in at, I think, 18 cents, then ground a bit sideways. And this is on the 4-hour chart too, so I could zoom out a little bit. And then we've had another 213% move just over the last week or so. Just incredible stuff. And very, very clearly, you can see the trend here. It's like a staircase. It will do elevated down, and I just did my mastermind video where I looked at some of the guys who are interested in this, where it might be topping out, where to take profits and all that. And just in very, very simple terms, I won't go into all the steps, but you want to look for structural breaks. And for me, the higher low structure you can see here was never violated tremendously. It's starting to get violated up here, but that's the real positive trend, those higher highs and higher lows. But when you do have a violation of that structure, then you tend to think that the main impulse is done. And there's many other indicators for momentum you can look at. But the 21 moving average just down here, which probably is a good spot to have a look. But overall, in a market that is just not very thick with the liquidity right now, these types of frothy hype bubbles, you just want to be very, very careful FOMOing into them. You've got to be careful FOMOing into anything, but in bull markets, generally you can get away with it a little bit. But in bear markets, when the liquidity is thin, if this trend is over, you got to be very, very careful, because the order books will be super, super lean, and it can drop real fast. Likewise on the upside as well, it can really, really ramp. So just keep all that in mind, guys. Wanted to alert you to the trend. Make sure you read our newsletter to find out more about it, because there's so many good nuggets in there of value that you can use for your investing. But so far, so good in the broader markets. We're just going sideways. A lot of momentum indicators are cooling off. Hopefully we see that broad uptick. Later in the month, we have the Federal Reserve coming out with the FOMC for more guidance as well. So we'll see where that happens. But the market is being very good at pricing stuff in at the moment. So have a wonderful day. We'll catch you again next time. Bye.